Happy Sunday, ladies and gentlemen. I'm hoping you've all had a wonderful weekend. I know I certainly have. Today, we're going to be delivering another daily cryptocurrency market update. And if you are new around here, every single day at 1 p.m. UK time, we release an update similar to this one to help you stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. And that's exactly what we're going to be doing in this video. We're going to be kicking the video off with a clip of Gary Gensler basically confirming that a spot Bitcoin ETF is coming. He also mentions Ethereum futures and the ETF that there currently is in regards to that, and how it's very likely that you are actually going to see, or he doesn't mention this, but in my opinion, it's very likely that you are going to see a spot Ethereum ETF, and then you're going to see probably other altcoins get their own spot ETFs, and then you'll likely see sort of baskets of these altcoins. That is all still to come in the future, and you get the opportunity of front running that. We know what spot ETFs have meant for the likes of gold, the S&P, and a number of other things. We've covered it previously on the channel. So we are going to start the video off there. Then we've got lots of really interesting things to dive into. We're going to be talking about the bond market again, because the bond market is so critical to the economy, to how it plays out, so it's really what happens with the bond market is going to dictate a soft, hard, or no landing. And we are getting a lot of calls for people to buy bonds again. Now, I'd be very wary of this. You've had the likes of Raoul and many other people out there, these bigger channels, that have told people to buy bonds throughout the past sort of couple of years. And it's not something that I'd be the first man through the door for, but we are looking at a potential risk-on period. That's going to largely be anchored around the dollar going down. We are going to be covering that again. We're going to be looking at some comments from Robert Kiyosaki. Quickly, to go back to the bond comment, we did see Bill Ackman actually cover his bond shorts, actually hedge it. Then we're going to move on to some thoughts from Robert Kiyosaki, who I don't think is very good at predictions on the market, but I do think he understands the general system and the fake nature of it very well. Then we're going to be talking about a number of articles that have come out. One article that predicts a 10,600% rise for Solana by 2023 from VanEck. And then we're going to be looking at the kind of global digital renaissance that's taking place and some articles related to that. Then we'll be rounding things off with a Bitcoin chart. Bitcoin looks very similar to gold in regards to what it did pre its move on Friday. So you could be looking to start the week with a bit of a rally for Bitcoin. And then we'll talk about risk on, risk off, look at the dollar, look at the basket of risk, and then we'll round things off with looking at GDP and how it typically reacts before a recession. So, as I mentioned at the start of the video, we have a lot to cover. Without further ado, let's get straight into it. And let's start off with a clip of Gary Gensler talking about futures ETFs and there being a bit of a mismatch with no spot Bitcoin ETF.
Bitcoin futures and I think Ethereum futures and so forth will exist, and Bitcoin ETFs have not, and that feels a little inconsistent to me as an observer. And I'm now, in academia, but it feels a little inconsistent, even though the laws aren't exactly the same. They're quite similar.
So it's just a very short clip, and it's an old clip. It's a clip when he was still at MIT. You've got to be careful with people pulling up old clips because, of course, people's views can change. But I think the inevitability of a Bitcoin spot ETF, it's going to happen. The second you had BlackRock enter the space, they've got a very high, I think they've only ever not had one ETF approved over hundreds, track record of getting spot ETFs approved. There's a very high likelihood that you are going to have a spot ETF soon in the near future. And that's likely why we're getting a lot of the price movement for Bitcoin that we are getting. But you will have other ETFs that follow in related to crypto. And it's a matter of, when, not if, in my opinion. They're going to drag their feet. They're going to put in proposals. We've seen a very, I think, healthy dialogue that, of course, the SEC is in charge of with the people that have been applying for spot ETFs and the SEC. But it will happen. Be cautious for when it does happen, because it could be one of those buy the rumor, which is currently happening now, sell the news kind of situations. And I think that's going to provide people with a second chance if they have missed the train. You guys will know that we've been accumulating crypto, assessing a fundamental shift in the markets, really since the start of the year, and we continue to do so. And we're actually looking at a number of altcoins right now that we think are going to do spectacularly. We were very early on calling the turn for Solana. So early, in fact, that I missed the trade personally. I actually took a loss on it just before it turned around. But the idea was very right. But it's all about, in my opinion, trading is not about making right calls, because then everyone can do that if they make enough of them. It's about actually making money and having the P&L to back that up, which most of your so-called traders on Twitter and YouTube will never show you. To cover the first thing that we want to get into, this is from Jim Bianco. Barron's recent sort of publication, Barron's cover today, and it says time to buy bonds. It's time to stop crying about bonds and buy them instead. Treasuries have had one of their worst 3-year stretches on record. Why it can't get much worse. Now, in part, let's go over to the bond or a representation of bonds generally, which is TLT. In part, I somewhat agree with them because actually, if you look at what happened in the UK, we're going to jump all over the place here, guys, with the gilt market, and we'll use a 10-year gilts. This caused the Bank of England to step in and say, we're going to buy gilts. And you saw this spike. You also saw, to throw TLT on here, similar thing with TLT in nice Bitcoin orange. And actually, if you correlate that to risk, and remember we've been looking at a risk on period that anchors around the dollar, which we'll bring in a second. I don't see anybody else putting out analysis like this, guys. And I hate to blow my own trumpet, but we really, I believe, do understand the markets quite well. Anyway, enough of me shamelessly gloating. Across the board, you had, a kind of uptick, and this was kind of where the rally really started. Couple this with a Dixie to throw it on, and the Dixie going down. Dixie's been going up on the back end of this. How low this, to finish the point that I started on, the gilt market basically got a bid because pensions, banks were on the brink of a real disaster. And the government's had to step in and basically bail them out. And we saw a similar thing with the US, with Silicon Valley Bank and stuff like that. They've already allocated and had a swiftness to act to the tune of $400 billion. Remember, the great financial crisis was only $800 billion, 800 to 900. So how much lower can it go before people need to step in? If you look at Bank of America, for example, they allegedly have a $100 billion hole as a result of what's happening with the bond market. And can bonds go that much lower before a real crash takes place, which causes people to have to pivot back into the central banks to pivot to back to supporting things like we've already seen them have the willingness to do. So I somewhat agree with this. You had Bill Ackman's tweet, which continues to ring in my ears in regards to covering his bond shorts. Now, he either reckons that's going to happen because shit's going to hit the fan and they're going to have to, or you're going to get that natural bid into the bond market as people redeem a recession closer and closer. Quickly on the recession thing, we essentially have been right on the markets. Certainly we're out the markets in 2022, but getting back into them, I think across the board, risk's done quite well. Altcoin sideways, that's the name of the game, but they will follow Bitcoin. And they are up in regards to the start of the year, many of them. But typically you have good GDP into a recession. Rates lag. The markets always go higher on a tightening cycle. This is contrary to popular belief and what you see on Twitter and YouTube. And everything kind of is aligning, and we looked at Larry Fink's comments on this yesterday, with a crash happening later on. And the market's actually doing well into that. And this is why I'm moving on to Robert Kiyosaki now, jumping all over the place. I don't really rate his short-term predictions on the market whatsoever. In fact, I think if you look at them categorically, he's very wrong consistently. This guy has been a gold bug for calling a crash now for probably longer than I've been alive. And yes, we've had many crashes, but not the crash that he's been talking about. And his tweet here reads, "Ship of fools. Forever and ever, financial experts have promoted the idea. Smart investors invest in the 60/40 bonds stocks portfolio. In 2024, 60/40 investors will be the biggest losers before going down, with the ship considered a shift to 75% gold and 25% Bitcoin, real estate, oil stocks. This max may allow you to survive the greatest crash in history. Good luck, take care." The greatest crash in history is likely in front of us, but his timing of calling it in 2024 is, in my opinion, baseless. Sorry, I do think it is. However, I think Robert Kiyosaki will eventually be very right. And actually, I feel very sorry for gold bugs. We have done a lot of looking at, I think I've even got a whole section in my trading view of looking at assets against the money supply. Nobody else does this. This is gold against the money supply. So if you divide gold's price by the inflation of money, You've been underperforming the money supply, yet it's supposed to be a hedge against inflation. I'm going on a real tangent here. This is, I believe, real estate. This is Tesla. So only really tech. This is the SPY. It's basically back at where it was, pre-March 2020's crash and pre all the printing. Microsoft tech has outperformed. Bitcoin has actually been a real guiding light. And we go into all sorts of things, even Apple. But the gold bugs, I think, have largely been very wrong and haven't really hedged much, but they will all of a sudden become very right. So just a bit of a comment on that. And certainly a 60-40, well, we kind of disagree, and we think the stock market's actually going to go higher. It's make or break for the stock market at the moment. We know at what point we're invalidated. It's largely going to anchor around the dollar in this risk-on period. But actually, if bonds get a bid for whatever reason, a break, a pivot, a fear of recession, he's probably going to be quite wrong on this call for 2024. And I'd be interested to see how this plays out. But enough of the macro stuff. Bringing everything back to crypto before we look at the dollar risk on and the more immediate sort of price action for Bitcoin, which looks very similar to gold before it had its sort of Friday move. The world is moving in a digital direction. We know this, and crypto is going to play a real part in it. The buzz is real. Leaders leveraging the digital shift. This was a great article. Gartner suggests that by 2026, 75% of organizations will adopt a digital transformation model predicated on cloud as the underlying platform. Cloud computing enables companies to scale and maintain flexibility, while the C-suite focuses on business operations, not managing complex IT infrastructure. Right now, and this is probably where, and we're going to be covering this a lot more, I already talk about it with my Patreons, decentralized cloud computing and compute is going to be the next thing. In the same way that Web 2 revolutionized this sector, Web 3 is going to revolutionize it even more and actually eat a lot of Web 2's dinner. And we are looking to buy coins that are positioned, or crypto projects that do exactly this. Decentralized storage offers and computing offers a magnitude of, it's more efficient in many ways than centralized computing like what Google offer. I find it very ironic, and I think most people don't really understand the space they're in when it comes to crypto, that you have a lot of projects out there that will tout their decentralization whilst 25% plus is actually ran on Google Cloud of their servers. Or Amazon, for example, is actually what I meant to say instead of Google Cloud. Very interesting, but the whole world is going digital, guys. We are in the process of writing a book naming 10 cryptocurrencies that we believe will shape the future. We will get that out as soon as possible for you. Moving on, VanEck predicts a 10,600 Solana price rally by 2023. It was a great article, actually, that they published. We were very early on calling Solana. And actually, I think Solana's set to continue. I think Solana's going to do very well. This is what we were looking at. Unfortunately, I got capitulated out. I just couldn't, due to risk, hold down here. We got in here, looking at this as support. It did one final low. You had your beautiful 3 impulsive wedge into a full-on breakout. Gutted. This would have been a year's salary for me, or a year's salary for most people. But we got capitulated out at a small loss. Solana is very likely to keep going. If you look at what it's currently setting up, we saw a similar thing with Zigor chart, and with Bitcoin right now, we're seeing it. So I think Bitcoin's going to have a pretty good open. This is quite a long update. Let's move on to risk off. Before I do that, I actually want to pull up a chart to show you guys what economic data you've got ahead of you so that you're all informed. And then we're going to sign off and love and leave you. Guys, don't forget to like, comment, and subscribe. Also, we do have a website, allincrypto.com, where we're publishing articles consistently. We are on all podcasting platforms for the podcast that we release every Thursday. We also have a Twitter, @RealAllinCrypto. We're now on Instagram and TikTok, and got lots more things coming, hopefully very soon. So you could be looking at a good week, a good start to the week. We'll see. Dollar still needs to roll. We've looked at this in a million and one ways. We'll just put Bitcoin and the stock market and maybe even gold on quickly. This needs to roll. And I do think it will, actually. I think there's more likelihood of it doing that, even though it's showing strength at the moment than not. This looks like an indecision phase. It kind of looks like a bit of a broadening structure or a channel. I want to see this roll for us to get aggressive and this kind of turning in risk. We got that across the board, but then the stock market due to earnings went down. Stock market really needs to pivot. I don't want to go into that. We'll maybe cover that tomorrow. But we'll see what the week ahead brings. But Bitcoin looks to be setting up quite well. So it's all still anchoring around the dollar. We covered the what GDP looks like into a recession, supports our thesis on lagging. In the week ahead, you've got lots of Dixie cross data. You've got employment data, US ISM manufacturing, US Fed rate decision. They're very much expected to leave rates where they are. Bank of England rate decision, no change. And we're seeing this across the board. And then you've got US non-farm payroll, which is going to be an interesting one. You had such a whopping beat in September that the Dixie may have a bit of a hangover from that. It's such a good time that you may have a hangover from it in the coming one. So we'll see. We'll keep you up to form, informed daily. And again, if you have enjoyed this content, guys, a like and a comment is really appreciated. I do feel like, as far as channels go, we really do offer something that most people don't in regards to the information that we put out, not just on the cryptocurrency markets, but across the board. We talk to lots of industry leaders in the crypto space, lots of builders, lots of pioneers, but we also speak and are part of, a lot of great economic thinkers and traders, network. And yeah, on that note, I'm going to love and leave you. If you've enjoyed the content, like and comment is appreciated, and we'll catch you in the next one. Thanks for watching. Have a fantastic Sunday. See you in the next.